And welcome to ETF Edge, your go-to place for everything exchange-traded related. I'm your host, Bob Pisani, joined today by Tom Lydon of ETFtrends.com, Dan Wiener of Advisor Investments. Let's start today with the markets because the S&P 500 is 1% off its historic high, but you wouldn't know it from the trading action. Last week saw the lightest trading volumes of the year at the New York Stock Exchange. So what's going on? Even with the markets rising, there's plenty of nervousness. This is an unloved rally. We've said that many times over the last several years, but that might just be the best thing the market has going for it. Dan Wiener, the low volume and low volatility, a bullish sign? Is this a contrarian indicator? How are we supposed to read this?
You know, it's hard to figure out, but the market actually hit an all-time high on Friday. You know, I always like to say dividends matter.
You include dividends.
Yeah,
yes.
Of course. Well, I mean, are you giving away your dividends? Right. I don't think so. So the S&P total return hit an all-time high on Friday. So low volume, hard to understand. I think a lot of people don't understand what's going on in this market.
Well, Tom, isn't the obvious explanation that the unloved rally story that you and I have been talking about for the last 4 or 5 years, we're hitting new highs under traditional technical analysis? You'd want some confirmation that more people are buying into the rally as we're near the new highs. This kind of tells us that a lot of people are still skeptical. Isn't that the right way to look at it?
I think you're absolutely right. But when you look back at the fourth quarter, ETF investors surprisingly weren't selling. They were actually buying when mutual fund investors were selling. Then when you look into this quarter, there wasn't as much buying as we saw in Q1 of 2018. I think people are fully in. They're fully invested, and there's just not that much more to buy at this point in time.
Well, so it's different than what I was saying. I'm saying some people are still staying out by definition. They're still waiting to get in to see if the rally is real. Maybe if we hit new highs, I'm going against your idea here, that'll drag in more people and add fuel to the rally.
I think you have a bifurcation of behavior among investors today. ETF investors seem to be on the more on the buy and hold side. Yep. Fund investors, as we know, very emotional, buying and selling, maybe at the wrong time.
Dan, you've got $5 billion in assets under management. You're also one of the great experts on Vanguard. You write a newsletter on Vanguard investing. Vanguard's been very successful moving into the ETF business. Vanguard has some funds that are mutual funds and very similar funds that are essentially ETFs.
Right.
How do you distinguish between them when you're making recommendations to your clients?
Well, basically, first of all, we're big believers in active management. You know, Jack Bogle used to say, if you can earn 1% more, you're doing just great. Well, at Vanguard, you can do that with some of their active managers. Some of the active managers that we've found outperform the indexes. So our first choice is look for a great active manager and buy that first. Then if we have to go down and look at the ETFs versus the indexes, we're looking at how big they are, whether there's a lot of active trading going on inside of them. We're trying to figure out what's in, or looking for what's in those indexes. Because, you know, we were talking about healthcare earlier today. The difference between these various indexes, what's in them, how much they're weighted, it makes a big difference to the investor.
Do you have an overweight recommendation in any sectors?
We have
right
been
now?
Overweight healthcare since the day we opened our doors almost 25 years ago, but through active. You know, our manager, we've used either Fidelity's active healthcare fund or Vanguard's active healthcare fund, or the Hartford fund, which also uses the same manager as Vanguard's from Wellington. They don't own either Johnson & Johnson or Pfizer, which are the two biggest holdings in the ETFs.
Well, Vanguard Healthcare, one of the legendary healthcare funds, used to be run by Ed Owens, legendary investors. And it's a tricky game, moving between medical devices, biopharmaceutical, or just gigantic pharmaceutical companies. You kind of have to have a sense of market timing in a way.
Well, you point out Vanguard, most people in the ETF world look at them as the big indexers, but they've got a great active business. Dan, what do you think about these businesses combining now that we're going to have active management within Vanguard ETFs?
You know, the question really is what kind of disclosure there is. Listen, the ETF business, 20 ETFs represent how much of the, you know better than I, it represents what, 90% of the assets? Everything else is ETFs on the margin. People playing around with different ideas. Throw it up against the wall, see if it sticks. You know, the factor business that Vanguard's gotten into, the ESG business that Vanguard's gotten into, it's become a marketing game now. You know, Vanguard, under Jack Bogle, you never referred to a mutual fund or an ETF as a product. Today, it's all product.